Good morning, traders. It's 8:01 a.m. Chicago time on Tuesday, the 25th of January, 2022. We are looking at episode number 2157 this morning. Thanks for joining me. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Scanning the screens here, the market seems to be skewed down again. We have a risk off, risk posture this morning. It has gone from risk off to mild risk off, and now it's risk off again. It's we had a little pop and then a drop, but overall, the theme has not changed. We still have some really important releases this week. One of them is Microsoft after the close today. Massive companies are reporting earnings. And in addition to that, we have the FOMC tomorrow. So with the FOMC tomorrow, are you really going to try to guess at what the Fed is going to do or say? Or would you just wait it out? I mean, yesterday's sell-off, a lot of participants are forced out of positions as it drops and drops and drops. But overall, this sell-off across the board has been, and I've said this in Convergent Trading's Head Trader channel many times, very well orchestrated. There's no panic to the sell-off. It is rotating real well. Partial evidence of that is that the S&P, despite 197 points of range yesterday, did not leave any single prints. It had an excess at the high, but really it did not leave any single prints. Very orderly. The market is rotating and filling in structures. This is, if you guys were here for the end of year last year, that week I talked about the wall and the missing bricks in it and racing through and not laying down some good bricks and mortar to build a strong fortified wall. On the sell-off, they're definitely the participants are doing a good job of creating good structure on the way down. So yesterday we also had capitulation at the low. We had a reversal, and we finished, at least in the S&P, on a neutral extreme high on extremely heavy volume. We had about 3.2 million contracts traded. It's about 3 times the expected amount. So already you could see in the ES box right in the center of your screen under overnight status, you could see that the auction condition, again, multi-distribution, really balanced. If you take away the volatility, you would see that it's really balanced. We've traded a little bit around settlement as we opened last night, but overall we're trading almost a Gaussian distribution imbalance. We remain, on top of the heavy area. We'll look at that, but look at the volume, 445,000, well above what we would consider normal or the first standard deviation. Over the last 252 trading days, which is 272,000, we've doubled that volume already coming into the session. So it's pretty heavy. Looking at the overnight inventory, 99% short, 99% short, 99% of last night's volume, or the volume so far in Globex, is below settlement. So the market, the participants are positioned to the short side here and moving back, being responsive into the value area from yesterday, which is a little bit hard to define, but it's actually there. The market actually created a nice bell shape below before running off into the close on that rally and finishing positive. Range 87.75, 87.75 points, quite heavy. The expected range overnight's around 23, 24 points. Normal is up to 35 points, and we've more than doubled what is normal. So what does that tell us? What do we care looking at the past? It is saying that we need to pay attention. We need to pay attention to to the fact that there is a lot of participation, so we expect a lot of opportunity. And when I say opportunity, because my statements have to be balanced, when I say opportunity, I'm talking about the opportunity to profit, to make money, but also the opportunity for greater risk. Those go hand in hand. You do not have a chance at making more money without taking on some marginal increase in risk. So these are days that we don't want to miss. These are days where the market hands us the ability to participate, and win or lose, it's giving us opportunities, as opposed to the days when it would trade 9 points of range for the entire session. What's key here? Participants resting after wide ranges. We're taking a breather this morning. We do not have a lower low or really a higher high overnight. The FOMC tomorrow is key. Earnings are key. There's huge risk overhang. I say there it's elevated risk overhang, but really there's a lot of risk overhang. And what this leads me to believe, and I'm not a macro analyst or anything like that. I'll leave that to Jeff Snyder and the like. But there is a lot of risk overhang. I would say on a swing basis, rallies are likely to be sold. Rallies are likely to stall from here. There is a lot of technical resistance up top as well. So just keep that in mind. Today, we don't have anything big on the calendar planned. Case Shiller has passed. We do have consumer confidence. We have API crude oil stocks and the Bank of Japan summary of opinions this evening. Again, the key releases are tomorrow. Fed interest rate decision at 2 p.m. Eastern. Fed press conference at 2:30. That's a major release tomorrow. And then we have GfK consumer confidence out of Germany on Thursday morning, which will get things hopping. It's interesting. The European markets were just hammered. They really got hammered yesterday, down 2+% as we came in during the trader bite. And look at them now. They're having their bounce. Again, a capitulation there. So the market's taking a rest and taking a bounce. So on the day time frame, we may see a little bit of support coming in unless we see it really plummeting down. We're back at yesterday's open, basically, in the S&P, and that's where we stand, okay? Bitcoin still hovering around that target down below. The expected support took a nice bounce yesterday, expecting it to push to 40, and then it'll be really important for Bitcoin participants to take it through 40, or they risk seeing 28 go for a run at 20. So I'm still bearish as of Thanksgiving of last year, as I posted on Twitter. Pretty bearish on crypto, especially Bitcoin, and that's working out. That I don't expect it to always be this way, but it did work out as planned, and it's bouncing and resisting levels as expected. So selling, as I talked about on Friday, which didn't happen, as I talked about a little bit yesterday, it's a little bit overdone, so I'm a little cautious. And we ended up actually doing what was expected. I'll spend a brief amount of time on this. Yesterday, I talked about the primary scenario pushing up and then dropping into 42.70. We ended up going to 42.40, something like that. What was the low yesterday? The low, 42.12, forgive me. So I missed it by about 50 points, 58 points. Really, the range and volume yesterday was just absolutely outstanding. But scenario one, I was looking for a bounce into the close. It bounced actually a lot more than anticipated, which tells me that we need to cool our jets when it comes to being bearish or anticipating more smacking of the bid on the short side. So just let the market set up and tell you which side it's willing to play in. Today, I wouldn't be surprised at these prices here for sellers to still come in and liquidate their risk assets and rotate into cyclicals, utilities, or dividend paying stocks. With the increase in interest rates, with the increase in interest rates, the risk adjusted return on owning stocks doesn't look so attractive, and that's the result that's likely to be the reason for this liquidation. It's really stimulus withdrawal. It's not really inflation. They're somewhat tied together, but that's really what I think is driving things according to my research. I talked about that yesterday a little bit. So let's take a look at what happened yesterday. It is tough to show yesterday's action on one chart, but here we'll give it a shot. I would need to go to 4K on this to be able to show it, but let's go clean here. You can see that we did have a push up. We did not get to the 50 yesterday. We just, remember, the primary scenario was a push to 50 and then 70 on the downside. That's what was expected, but because we were off by about 30 points on the top, and the range actually expanded a lot more than I expected or statistically likely, we ended up pushing to 42.14 instead of 42.70. But you could see yesterday, by the way, really, I know people lose in this kind of environment. Some people will even lose their entire account. It's sad. I hate it. It actually aggravates me, especially if someone at EdgeClear, a member of EdgeClear, does that. But there were some really fantastic opportunities yesterday. The thing about higher volatility in a market like this, the thing that I love about this is not only do you get a lot of range and a lot of opportunity, again, with the possibility of losing more money, just to be balanced in my statement, but it's a much purer trade. So you'll get things like, support turning into resistance right there. And we see it, support turning into resistance right there. The zippers, whether it's a tiny little zipper or a big box, zippers were really fantastic yesterday. You can really lean on boxes and box trades. Really outstanding type of action. Very thin, very fluid, very quick movement. So that creates fear and emotion and gets people jacked up with their emotions. But overall, if you stick to your plan, there are plenty of opportunities to find pullbacks. You can get paid on breakouts here. You have to get paid more quickly, or you have to scale out more quickly. But there's a lot of opportunity for pullbacks, and there's a lot of opportunity for defining risk. And that's the most important thing. I took a trade. I commented about a trade yesterday right here. Let me kill this fractal indicator. Right here, look at this. We put in a low in the first hour, and that's our IB low. Very legit IB low. It came down, made that low, and bounced back up. So a very clear, it didn't make the IB low right at 1 hour, and it just kept going. And so you get this line that's generated by the computer that doesn't mean anything. We had a nice little bounce here, all the way back through to the OS low. And then we break through, and I passed on this trade. And I narrated why I passed on this pullback to the IB low, although it worked out perfectly, as you see here. I mean, look, hopefully no kids around, shit happens. But overall, I passed on this trade for the simple reason that I could not define structural risk. I could have taken that trade with a 6-point stop. It would have been okay. 6 points is about where I am with my non-structure defined stops. But I was really jonesing for a 70-72. 70 to 75 is the area I was looking for. Why? Because up here, I can define risk. I can see when it has pushed into an area that resistance exists, a lot of volume exists, and if it pushes through, I know I'm wrong. But if it's just a line in a chart, that I'm leaning against, it's tough for me to take that in this environment because I feel like I'm fading a move. So I passed on it, but the IB held as it often does, and then we came back and then created this this push into this box zipper right here before we started to rally. So it goes both ways. Again, time of day for that trade wasn't fantastic. You know, the middle of the day, but later on it did pull back almost to the IB, and then you get this little opportunity for a pullback right here. So you could see that. Oh, didn't catch that. Fine. There's a dip here. You need a wider stop, 5.5 points in this case, to catch another pull. You could see that it breached the IB, so now we're neutral. There's about a 53% historical probability that if we go neutral, we would finish on an extreme. Somebody pointed that out from our market stats reports on convergent trading yesterday, which is true. So there's just a slight tinge to finishing outside of the initial balance once we go neutral. And with the lifting that was going on, imagine, one thing I want to point out here, and I know I'm getting long in the tooth here. Look at what's happening here. Let me actually go to a higher time frame. Let's go to a tick by 20 PNF just to compress the chart a little bit. Loading. So if you look at this, look at the delta. We're selling off big time. Massive ranges, right? We're talking here 53.15 or 43.15 to 42.14 or 42.12. 100 points. 100 points. More than 1 week's range in this one move here. What is the delta doing? They're buying them. They're buying them on the way down. And so I could see, and I pointed this out again in the chat room, I can see that if this thing starts to roll and get through the mid and VWAP, I can see a very strong push to the high, and we finished very, very strong in terms of delta. The delta finishing up 33,000. That is really outstanding in terms of delta these days. And I was really actually targeting, I was more greedy. I was really targeting this 44.23 MC point of control up here. You can see a very prominent balance point. This is a key area up above. Key area above for a test at 44.23. We could not make it up there, but holy cow, we really squeezed and we got into the prior day's range and closed slightly higher than where we closed the day before. The day before we closed down here, settlement is a little bit higher last night. So a very clear, strong base, positive delta, strong poke down below, good rotations. So a very, very orderly, rotation down, good auction, and yet we come all the way back through with a really positive delta. The low yesterday is expected to hang in there for a while. The key thing that really impacts us that happened yesterday is we took out October's low. We really ended the one-time framing up on the monthly. We've taken several lows, and I'm seeing a regime change, as I mentioned yesterday. I'm not expecting a V bottom and a return to the all-time high, although we're off by 10%. We could easily recover 10%, but I'm just not seeing that in this environment. I'm expecting that there's likely to be a lot of resistance on the way up, and you can see where that resistance is. I pointed out on Monday that this area here is the next key balance. We have a prominent point of control up here, naked point of control at 44.48, expecting that to present some resistance and so on and so forth. The 44.23 MC point of control, and high volume node here. Couldn't quite get to it. And then last night we took out the high. We finished at 44.10 on the high at RTH in the day session, and the night session went through it by 6 ticks. To me, this says what? This says that today is likely to be a very choppy, wide range, choppy, whipsaw day. So for everyone that's listening, and if you're a prop trader of mine, I would tell you, calm down today. Temper your expectations. Those illusions as you're going to bed last night of how you should have hit the bid for a 50 lot, you would have made, $500,000 or whatever. And that's what you'll do today. Temper that. Today is not about greed. Yesterday was about greed. Today is about defense. I'm not saying don't trade, although if you don't see it, don't trade, but temper expectations today. I'm not expecting directional movement. There was capitulation. The big picture, the overall picture is for sellers, but there was a clear buying interest and a neutral extreme up day yesterday. So there's likely to be a battle. So that it's going to be quite choppy and quite whippy. So calm down today, please. Don't. If you made some money yesterday, today's an incredibly appetizing day to lose or give that money back. Okay, so a quick overview on Edge Pro X of the overall picture. Look at what we've accomplished on the S&P. So we've really, again, we have a lot of separation here to the low, but look at what it did. It pushed higher, and you could see, it's hard to see on this chart here, but you can see in the bigger picture, really, we still have a down skew, right? It's really not. We don't really have a good base yet. So what this could do is pull back and put in a lower high. The low yesterday that we put in is very important. The high yesterday that we put in is very important. We could put in a higher low. I'm sorry. I'm looking for a higher low, then a turn, and then we start to work our way back into the 45, 48 area, and then up into 46.12 and so on and so forth. And then, we're back at the monthly VWAP 45.91 and then 46.12 and so on. So this area up here. So that's what we're looking at for now. Don't get too excited about this being the low or whatever. Don't go and YOLO some long calls or something like that on SPYs. We're not there yet. So it still has the momentum to the downside, and any rally is expected to invite more selling as others look to get out. So what are we expecting for today? Let's get to that. Okay, so what are we looking for here? So I got 1 sigma, 2 sigma. Okay, cool. This morning we have, let's get all of our bars in. Yep. This morning we have somewhat of a balanced profile here. We are right on top of the overnight point of control. We are below VWAP and the mid. We are above this key area down below here at 43.15, 43.15, 14.15 right here. Okay. And what we are likely to do is really whipsaw around here. I'm looking for it to re-challenge some of the value that we established yesterday. It could move down as far as 75 here, the point of control from yesterday. Don't know. But overall, I'm expecting it to be sideways. I'm expecting us to hold inside of the prior day's range today. I'm not expecting anybody to commit. Think from a fund manager's perspective. Why would you commit in either direction? Unless you have a lot of risk overhang that you need to cover, there's no reason to take a position before the Fed comes in tomorrow. So that's what's driving the scenario. Likely to be in the middle, likely to be choppy. A lot of hedging today. Likely to see sweeps that go back. Those are the whipsaws I'm talking about. And so sideways trading. Scenario 2, no different. Sideways, so I'm expecting the overnight low to be taken out on scenario 1. Scenario 2, sideways, that squeezes higher, establishes a higher low, pushes to the overnight high, which is 4406.75, and then falls right back in and just stays in the middle here into the FOMC tomorrow. So please, it could open test drive and rip up 100 points. I don't know, but I'm willing to bet, I'm visualizing, I'm willing to bet that the scenarios are quite muted today, and that's what I'm expecting. Good luck. Sorry about the long trader bite. We're opening in about 2.5 minutes. Take care.